Welcome, everyone. This is your host, Adam Coleman. I'm excited to have Hazel Secco with me today. She is a certified financial planner and founder of Align Financial Solutions. Today, we're going to talk a little bit more about insurance and risk management, more specifically, all the various insurance considerations outside of life insurance. So, Hazel, thanks for being here.
Thank you for having me, Adam. Yeah, so I'm excited to talk about the other insurance since they don't get as much attention as the life insurance policies, but they're certainly very important part of not only just financial planning, retirement planning, but overall financial health.
Yeah, that's what I was going to say. There's still so many misconceptions and misinformation about life insurance, but I feel like at least that topic gets covered pretty well. I
Yeah.
don't see a lot of content going on about other types of insurance, namely disability, long-term care, those types of things. So I appreciate you being on here. I know you're the expert, so we'll be able to go through, get a lot more detail about those things. So I appreciate you being here.
Great. Thank you.
Well, jumping right in, I guess, what are some of the key considerations for clients when it comes to the other types of life insurance? How much do people need? Where should they go to do more research on those specific to disability and long-term care, for example?
I usually recommend all of the clients to go through the financial planning process so that they know exactly what they need in terms of disability, long-term care. Because technically, if you're able to self-insure yourself, you don't need insurance policies. It's just that you're transferring your risk into the insurance company so that, adversity happens and you want to make sure you're covered and your family is covered. So for disability insurance, usually the big corporations, they cover short-term disability insurance policies. So if you're sick or have to go out for like 30 days to 90 days, it's usually covered by the employer, meaning that they would pay for it. But the long-term disability is where there's a gap in between the needs of the people versus what they get offered through the employer. So I would say definitely have the income gap analysis done so that what might be missing in case of your disability and go from there. But even if you're shopping for your insurance policy through a broker or insurance broker without any comprehensive financial planning background, I would definitely suggest all of my clients to at least talk to a financial planner so that they understand what's missing and then would be ideal for them to be covered.
What are kind of the rules of thumb when it comes to long-term disability? Is there a standard amount that you think that people should target? Like life insurance kind of has that rule of thumb where I guess it's 10 times your annual salary. With disability, it's typically set up as a percentage of your annual income, correct?
Yes, that also depends on the professions, but general rules of thumb, I would say like high earning, or if your family depends on your income highly, then maybe mixture of insurance altogether should end up being anywhere 60% to 80% of your current income.
Gotcha. And I think that's what standard employer sponsored plans are, but maybe speak to the differences there because a lot of people have their long-term disability set up through their employer. But what are some of the major issues that people should be aware of if that's what they're relying on?
Obviously, it's an employer sponsor plan. Sometimes it's cheaper, sometimes it's actually more expensive, depending on the insurance carrier or the employer. Obviously, if employer sponsors a lot of the premium, then it's going to be a lot cheaper. But the drawback is that you have to be with the employer to be covered by that policy. So let's say you get laid off next week and then you no longer have that coverage, then you would have to go to a private marketplace to get another policy. But if you're no longer employed, you cannot prove your employment and then prove your income, which makes it a lot harder to actually get the disability insurance. So it's always nice to have it private so that you are in control of your own finance. But at the same time, I think you should look at the pros and cons and then see what's the benefits in terms of the premium, and then determine from there, maybe have percentage through the employer and then the outside coverage for some amount so that you get some leverage in both.
Do the premiums go up quite a bit as you get older, kind of like it is with life insurance?
Yeah, the age matters just because when you get older, you are more likely to get illnesses or become disabled. So it does depend on the age. It's not as much as the life insurance policy because it depends highly on the income amount.
And the type of job as well, correct? Like that's a major
Yes.
factor in the premiums for those.
Yes. Yeah, that's also a main point. And then depending on the job category, they ask specific underwriting questions as well. So yeah, those
Are there
are
any people that
special.
you don't suggest getting disability insurance, or is that pretty much a standard that you would always suggest people have?
I actually have recommended a lot of my friends get the disability insurance just because I've seen so many young professionals have hard times in their job or in their life, or maybe becoming a mom, or there's a lot of life transition periods, and then it could have a big toll on them. And then mental health issues can cause a lot of anxieties and depressions, which led to a lot of young professionals to have to take a break. So during that period of time, the disability insurance was very helpful to cover the gap because they couldn't even think about going back to work. So in the meantime, for a year or two, they get covered by the disability insurance and then go back to work.
How about the long-term care? I guess what differs about the long-term care insurance versus disability? What are the major factors that you consider when somebody's asking you about whether they should get long-term care or just self-fund it, like you mentioned?
Yeah, that also depends on the numbers, right? So when you start to accumulate through the long-term care policy from your 40s, 50s, you're a lot more likely to have that portion of the money grow a certain percentage or guarantee inside of the insurance policy for the use of long-term care. But let's say if you get it at the age of 75 and then you get the long-term care conditions at the age of 80, then you don't have a lot of years to accumulate or grow your long-term care asset. So that's what I would mathematically find out within the planning software to see if it makes sense for the clients, or you just have to possibly draw down from your retirement asset.
How often do you see where it does benefit people to have the long-term care versus just self-funding it and planning to kind of have certain money earmarked for long-term assisted living or some other type of need for long-term care? Like, do you see a major benefit to the actual insurance side of things for that?
Yes, I do see a lot of the long-term care plans actually utilized. That's one of the reasons why a lot of long-term care insurance companies went out of business. And then the life insurance companies stepped into that business. And then they have a lot of hybrid policies that's life insurance and long-term care.
Hmm.
So that if you don't get that long-term care conditions, then you would be able to use that as a life insurance policy, which has dual purposes, which makes a lot of clients very relaxed about, oh, what if I don't get sick, or what if I don't get to
Right.
use it at all? So it's a lot more flexible in that way. So long-term care has been very, very helpful to the majority of the client base.
Are you seeing where, I guess, traditionally, do they have them standalone, or most of the people that you're working with, do they usually have it as an add-on to the life insurance piece? And I'm assuming we're talking about permanent life insurance, like a whole life policy, correct?
Right. Yeah. I'm referring to mostly the universal life or variable, even though variable side, it can be a little bit controversial, but yeah, permanent policy. And then the traditional policies are no longer sold anymore. So it's like a lot of the clients that are currently in 70s and 80s, they do have a Genworth Prudential policy that's like long gone. but I don't see any more traditional policies. It's all through life insurance policies.
Oh, there's not any sort of standalone long-term care policies? I thought they still existed, so you pretty much have to do it through a life insurance policy now?
So when I saw it last time, just quotes based on the age and like there are still some companies, but it just didn't make a lot of sense for the clients, assuming that it's just for the long-term care. For
Okay.
example, the premium was let's say $260 per month. And then if you don't see that possibly not getting used, people don't commit to that. And then I guess that's how the conversation gets swayed into more of a hybrid policy.
Well, that's what I was saying because I just randomly got a quote just to see what it was because I was just curious, and it was pretty high, and I was on the fence. It seems like it would probably just make more sense to just self-fund it and plan on just saving up enough over the course of time when you may need some sort of long-term care plan because they usually have caps on them anyway, correct? You can only get 2 or 3 years of premiums paid out. It's not like it's a lifetime
Right.
reward, correct?
It's not a lifetime. A lot of time it was like 2 to 3 years. Majority of the long-term care patients, they passed away within 2 to 3 years, but now it's becoming a lot of the cognitive disability, including dementia, which
Right.
led people to live a lot longer, like 6 years and longer. So long-term care, they extended the period to 6 years. But still, for young professionals or career building professionals, they can basically do dollar cost average into their self funding mechanism and
Mhm.
then have growth for many, many years. So I can definitely see that. But right now, yeah, for young professionals, I think there's a lot of self funding system that you can utilize.
The majority of your clients, are they doing more of a term policy life insurance and then self-funding everything else? Or do you see more people gravitating towards that permanent life insurance with the long-term care rider or add-on, whatever you want to call it? What's the breakdown or the percentage that you've been seeing?
So majority of my clients in 50s and 60s, they go into the life insurance policy with the add-on, like a rider, because that's been getting a little bit more innovative in the insurance company industry right now, where they make all the potential claims as an indemnity, and then you don't have to prove that you utilized it for the nurse that came in, but you could use it to give to the family. It's having a lot more flexibility in that usage. For example, there's a lot of policy where you can put like lump sum and then grow at a guaranteed rate of return with certain type of cap. So those policies have been very popular due to the flexibility.
I can't recall on your fee structure or however you're set up. Do you offer those yourself, or is this something that you're having to refer out to other insurance brokers?
So I work with the wholesalers who actually train me and let me know these up-to-date information about each product. And then I do actually offer these products.
How does that all get incorporated into the financial plan overall? Because you're obviously a comprehensive financial planner, so you're looking at their overall picture. What are the key considerations that you're using to figure out or which type of insurance should they have, which ones shouldn't they even worry about, and what's going into your mind when you're going through that process?
Yeah. So I start every client with a financial plan so that we can comprehensively look at what's going on. Because, like, we go to doctor's office, they don't just look at one thing, they look at the overall thing and then make sure everything else is okay. So we do the same thing. CFPs, they look at the overall financial health of each family and then look at what's the priorities.
I guess jumping back to more the long-term disability, long-term care, life insurance, are there any common mistakes or misconceptions that clients have when it comes to insurance planning? And also, how can they avoid those kind of misconceptions or pitfalls?
The biggest mistake I see is that clients or prospects come back saying, this insurance company, like my premium is this, like, how come this premium is so much more? A lot of times I don't necessarily offer the cheapest policy out there, especially disability insurance policy or long-term care. It has a lot of clauses and riders to it.
Mhm.
You probably are not looking at the apple to apple illustration. So I would highly recommend they should talk to a very trusted professional so that they can actually walk through the illustration together to know what they're actually purchasing.
Is that more that you're speaking of additional riders, like inflation riders, or are you more speaking to different companies that may have slightly different risk profiles? What are some of the major things that people should be considering when comparing, or what are the best ways to compare apples to apples when it comes to these very complex policies, as you said?
Yeah, so disability insurance policies tend to have a lot of different clauses and exemptions, exceptions. And so there's not necessarily like a price difference or major differences between the companies, but like some companies would highly suggest you to have this as a default, but some of the other companies would not have that and then show the cheapest option out there. So I think you just have to ask each company representative or speak to a broker that deals with different types of companies and then see if you are actually looking at the apple to apple. Like there's a lot of disability policies nowadays that excludes the mental health. Then
Uh,
it's like a disability policy, but it's going to be completely different if
right.
one covers mental health and then the other one doesn't. So those are just the main examples that I can think of in terms of differences within different policies.
Are there key differences between the long-term care? I'm assuming yes, because it's built into permanent life insurance, which in and of itself has a
Oh
lot of
yeah.
different stipulations. But what are the major issues, I guess, with long-term care that people should be considering when they're comparing one option to the next?
I guess the major difference, like I said before, is indemnity versus reimbursement. So indemnity is basically you have this allowance for monthly payment, and then you don't have to prove or have a proof of payment of where you use that money. So you get a doctor's statement saying that you are not able to do two activities of daily living, and
Hmm.
then you are able to get that monthly payment without the proof of purchase. But the reimbursement, you are actually paying for yourself first, and then you're getting reimbursed for it.
You
So
have
it's
to
like a
submit the
lot more
receipts to get
complicated.
reimbursed from them.
Yeah.
Okay. Do you find that the latter option is more problematic where they're not getting reimbursed properly, or is it more just a different method and they both end up basically being about the same at the end?
It's kind of interesting because when those companies offered only reimbursement policies, they were saying it's completely fine. They reimburse you, no problem. It's so easy. But they all converted their policy into indemnity now to compete with other companies. So it's,
Gotcha. So it
yeah.
was more of a marketing trick that they realized indemnity sounds better and it sounds like an easier process. But at the end of the day, it was about the same regardless.
Yeah.
Gotcha. Well, I guess on a regular basis, what should people do to make sure that they are properly covered with all these various different insurance policies? Do you think each year are there checklist items that they should have in mind of like, this is the things that I need to do to make sure I've got my life insurance or disability or long-term care covered? Anything they should be doing on a regular basis?
I highly recommend the life insurance policyholders who have variable life policies to review at least annually. If you have a regular visit with your financial planner and then look at your portfolio, financial plan, how you're on track, it should be all reviewed at the same time during your annual review. But if you don't have the professional that you do that with, then I would at least recommend to have them review their variable policy every year.
So not a whole lot they need to worry about if they've just got term and then a long-term disability. That's a pretty much a set it and forget it kind of thing, hopefully. And they don't have to
Yeah,
update the policies. Obviously, if they have a major life event or life change where they need to update beneficiaries, things like that, but nothing else they need to do on a regular basis, correct?
exactly. The major life changes, which should be talked about with your financial professional, those will change the needs of the disability insurance coverage. But yeah, other than that, it should be pretty straightforward.
Perfect. Okay. Well, no, that's been super helpful. Well, if people would like to learn more about you and then maybe share a little bit about yourself as well, who are you able to help? Are there specific regions that you're focused on? What can people do to learn a little bit more about you?
So I recently branched out as a, independent CFP, and I'm a CDFA as well, Certified Divorce Financial Analyst. And then I work with women to empower them through financial independence. That's my major goal and my passion. So that's where I have been associated with other organizations to be involved. I work with the women in life transition, like a divorce and widow. That's actually what I have been majority focused on for them to feel financially secure, especially, if they're going through the divorce, during the divorce or post divorce, I want them to be able to maintain their lifestyle as pre divorce, or actually maybe even thrive even more. But that's where I would be involved in every stage of their life so that they are secure and financially confident about their decisions.
You're out of New Jersey, New York area. Are you able to help really in any state, or do you specialize in that certain area?
Oh, right. I actually forgot to even, mention the region because like right now everything became sort of virtual. I mean, right
Right.
now you and I are in different states. So I've been talking with a lot of different clients from different states in person, New York City, New York metro area, but other than that, I work with all the clients from all over the US.
What's the best way to look up more information about you and your firm?
Align Financial Solutions is my website. They can search Hazel Secco, CFP, and then they can reach me at any time at my email. Probably that's the best.
Perfect. Well, I'll make sure to put that information in the description as well so that they can track that down. And I really appreciate you taking the time. This has been extremely informative. So certainly appreciate you being on here.
Thank you for having me, Adam.
Yeah, of course. Thanks, Hazel.